Listen up, apes. Incoming intel. The screens are bleeding red, and the signal noise, man, it is deafening. They absolutely want you to panic. They want you to sell. We're here to unplug you from their machine.
And right on cue, here comes the mainstream media, rolling out the fear porn. This right here, this is the official story they are injecting directly into your timeline. It's a classic meltdown narrative, and it's designed to do one thing: get your heart rate up and your finger on that sell button.
But you gotta look closer. Beneath all those scary headlines, the data is telling a completely different story. See, some are calling this what it really is, an engineered collapse. This isn't just a natural market correction, okay? It's a targeted psychological operation, a psyop. It's a trap set by the suits to shake the paper hands loose so they can scoop up your position for cheap.
So that brings us to the most important question, right? Are you being played? Is this coordinated wave of FUD, fear, uncertainty, and doubt, is it actively draining your portfolio as we speak? You need to know if you're the hunter or the hunted.
Okay, hold up. Time for the mandatory compliance shield. Disclaimer: I am just a space ape looking at glowing rectangles, not a financial advisor. This is educational banter, not financial advice. Do your own due diligence or the market will eat your lunch. All right, shields down. Let's get back to it.
All right, let's dive in. Welcome to the Decode. This is where we unplug from their narrative and jack directly into the source code of the market itself. It's time to separate the FUD from the facts.
So you've got two things happening. On one side, you have the official story, the reality they literally manufacture for you, and on the other, you have the ape reality. What the on-chain data, the blockchain itself, is actually showing us.
So, let's break down that official story first. The suits are just carpet bombing the news feeds with this stuff. CoinDesk is screaming about a crash to 75K. You got other sites reporting that realized losses are at FTX crash levels. Then MarketWatch chimes in, blaming stock market jitters. And then, of course, the big one: record ETF outflows.
And this number, this is their main weapon. A record-breaking $523 million was pulled from BlackRock's Bitcoin ETF in a single day. That is a massive number, and it is purpose-built to trigger a panic cascade. This is their shock and awe campaign. But is it the whole picture?
Let's flip it now. Let's look at the ape reality. So while they're screaming crash, the data shows a sharp rise in wallets holding over 1,000 Bitcoin. While they're talking about extreme losses, long-term whales are holding strong. We're talking diamond hands. And while they're blaming jitters, who's buying this dip? Asian traders. See, there's a huge divergence between the noise and what the big money is actually doing.
And here it is. This is the glitch in the matrix. The single most read article on CoinDesk's own site tells the exact opposite story of their headlines. Bitcoin accumulation amid market weakness. Whales are accumulating, you see? This isn't a meltdown. It's a transfer of wealth. It's moving from the panicked to the patient. They're telling you to sell on the front page while the back page shows the smart money is buying.
So that brings us to the verdict. We've seen the official story, we've seen the data behind the curtain. What's the play? Are we going to the moon, or is this thing going to zero? Let's break down both possibilities, based only on the evidence.
Okay, the bull case. I'm calling it the Great Shakeout. The on-chain data is crystal clear. Whales are buying this dip hard. They are absorbing all the supply from the paper hands. This FUD campaign is just a smokescreen, engineered by the suits to trigger a panic so they can load up on cheap Bitcoin before the real rocket fuel gets ignited. It's a classic wealth transfer, and you're being given a chance to get on the right side of it.
But look, we have to acknowledge the bear case, the Paperhand Cascade. That $523 million ETF outflow, that's not just noise. That's real capital flight. The FTX-level losses, that signals genuine market stress. If the retail panic they've engineered spirals out of control, this FUD could absolutely become a self-fulfilling prophecy, creating enough selling pressure to potentially force even the whales to capitulate.
And that leads us right here to the cliffhanger. The next candle on the chart, it means everything. The battle lines are drawn. We're at a critical inflection point, and the question is simple: who has more firepower? Will the on-chain data, the diamond-handed whales accumulating in the background, be strong enough to absorb this massive, institution-led ETF sell-off? Or will the suits' FUD campaign succeed in its mission to crash the system?
So here's the takeaway. Ignore the noise.
The headlines are a weapon, okay? They're designed to manipulate your emotions. Trust the data. The blockchain doesn't lie. Watch the wallets, not the headlines.
We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVIDIA stock on Moomoo. Links are in the description. Smash the like, subscribe to the tribe. Apes together strong.